Hi, this is Tim Yoder with Fit Small Business. I've been a CPA for 15 years, and today I want to share with you my 14 best practices for managing your accounts payable. Let's get started. The first is that you should enter your bills as soon as you receive them. So oftentimes companies will simply do like an individual will do and simply set bills in a pile. They'll pile up. Eventually they'll pay them at the end of the month or the end of the week. I highly encourage you to use your accounts payable software to help you manage and decide when to pay your bills. So enter them as soon as you get them so that you can easily print off a list of all the bills that are due, when they're due. Make sure you pay them a day or two ahead of time so that you don't incur any late fees. But if you're not entering the bills until you pay them, you're really not utilizing your accounts payable software. The second thing, when you input the bill, make sure that you input the invoice number from the vendor. This will allow your accounting software to prevent you from double paying a bill. So oftentimes vendors might email a bill and then also put a bill in the mail. It's very easy to accidentally pay that bill twice. If you're utilizing the invoice numbers, your system will warn you when you try to pay the same invoice number twice. My third best practice, input as much information as possible from the invoice. Don't summarize information. Accounting is all about information. So the more information you can put into your system from that invoice, the better. You never know when you might need that information in the future. For example, if you're looking to return a particular item, if everything on an invoice is just summarized as materials, well then you can't look in your computer system to see when it was purchased for what amount. You're going to have to go back through the physical paper invoices to find that item. So I really highly encourage you to input all the information. This goes doubly for credit card bills. I've seen people that will summarize an entire credit card bill as one amount and stick it in there. And that's even worse than summarizing an invoice from a particular vendor, because now you have all of these bills from all of these different vendors that are being summarized, so you don't even know who you paid what amount. So even on individual invoices, which is really the focus of this talk, input as much detail as possible. Credit card statements, absolutely input the details so you know how much you paid to each vendor. Okay, my fourth best practice, you really should be matching your bills to purchase orders. Now, it depends on the size of the company. If you're a freelancer, you probably don't use purchase orders. You just purchase what you want, and then you receive a bill. But look at the bill then. Make sure it is exactly what you purchased. As your company grows, you're going to want to have to do purchase orders so that employees that want to buy something have to get it approved. Well, you then need to compare that purchase order to the bill you receive to see if they actually are billing you for what you ordered. You need to design a process for bill approval before payment. Now, obviously, again, if you're a freelancer, you approve the bills, you pay what you want to pay. As your company grows, though, and other people are making the payments for you, perhaps a bookkeeper, they shouldn't be the ones deciding what gets paid. So you need to have some sort of process in place for the owner or whoever's in charge of determining what gets paid, that they do approve the payments before the bookkeeper actually writes a check or makes an electronic payment. If you do find a problem with a bill, be sure to contact the vendor immediately and straighten out the error. Perhaps you're in error, perhaps they're in error, whatever the problem, straighten it out before you pay the bill. And obviously you don't want to just sit back and not pay the bill. I'm sure you have customers to do that, and you know it's very frustrating. If there's a problem with the bill, tell them there's a problem so you can get it sorted out. Don't just sit back and not pay the bill, and then when they contact you 30 days from now asking you for payment, then bring up the problem. Get it taken care of quickly. Review the accounts payable aging report. So this is a fantastic report. It basically shows everybody you owe money to, and it classifies them, groups them by whether it's a current payable, meaning it's not overdue, or how long it's overdue. And so oftentimes they'll be in 30-day increments. So you have one column for current bills, one that are 0 to 30 days overdue, the next one 30 to 60 days overdue, etc. So if cash flow is really good, the accounts payable aging report may not be necessary because you're keeping up with all of your payments. But when cash flow is tight and you need to decide which vendors get paid and which vendors don't this month, which vendors have to wait for next month or next week, the accounts payable aging report is fantastic. We do have an article at Fit Small Business just on this accounts payable aging report. I'll stick a link to that down in the description below the video, so you can find that great article. As you're onboarding new vendors, I would utilize a checklist to make sure you get everything you need from that vendor before the first payment is made. Once you make a payment to them, especially if it's just a one-time payment, good luck getting anything from them after that. So make sure you get everything you need for your vendor file before you make that payment. So things that should be on your checklist, contracts that you have, make sure you get copies of any contracts, contact information, including a person. If they have special payment instructions, so oftentimes vendors may make you go through some sort of accounts payable service that they have, depending on their size. If they're a very, very large vendor, oftentimes they outsource their accounts payable, so you'll need to pay through that. Make sure you have all of that stuff in your vendor file. W-9, the W-9 form is going to give you their tax ID number, as well as information about how they're organized for tax purposes, which will then determine whether or not you need to issue them a 1099. So everybody that provides services to you needs this W-9 form. So get that as part of your vendor file. You can then use that to determine if you need to issue a 1099 NEC. We'll talk about that in more detail in a second. And lastly, certificate of insurance is often required of new vendors. Talk to your insurance company, see what their requirements are for your subcontractors to have their own insurance, and make sure you get that certificate of insurance before they begin work. My 9th best practice, attach invoices and receipts to the transactions in your accounting software. So almost all accounting software nowadays allows you to attach PDF files to individual transactions. So it's great practice to attach a PDF of the bill you're paying to the transaction in QuickBooks. So, we talked about perhaps you want to return a door that was purchased for one of your customers. To do that, you could just go into QuickBooks, find the purchase, because again, remember, we've entered all of the detail from the invoice. You find the purchase of that door, click on that transaction, have a PDF attached with the receipt, print the receipt, and you're off to return it. So it is really nice to have electronic copies of the receipts attached to all of the transactions so you don't have to sort through any paper files. Again, the goal here is when we input an invoice, we never have to touch that paper invoice again. Okay? We have all the information in the system, and we have a PDF copy of that invoice in the system. My 10th best practice, avoid paying bills earlier than necessary. So best practice here is you want to hold on to your cash as long as you can. You don't know what opportunities might come up or what necessities might come up. So hold on to your cash as long as possible. Don't pay a bill that's due in 30 days. Don't pay it in 2 days. Pay it in 29 or 30 days. Okay. Take advantage of early payment discounts. So if you're not familiar with these are the payment terms that come on your invoice. So something could read something like 2% 10 net 30. What that means is that if you pay within 10 days, they'll give you a 2% discount. If not, the whole thing is due in 30 days. So let's break that down. What does that mean? So if you pay in 30 days, you have to pay the full amount. If you pay in 10 days, you get a 2% discount. So that means accelerating your payment by only 20 days is going to give you a 2% return. So if you annualize out that 20 days, annualize that out to 365 days, oh boy, now I'm going to have to do math in my head. That is an enormous return, right? Something probably, what is that, about an 80% return, I believe, something like that. So that is a huge return on your money. You're earning 2% over a 20-day period. Fantastic. So even if you have to tap into a line of credit in order to do it, it's probably well worth it to try to take advantage of these early payment discounts. My 12th best practice, calculate the days payable outstanding. Or you might prefer the accounts payable turnover ratio. They basically measure the same thing. My preference is the days payable outstanding because it is a little bit easier to understand. It's basically the average number of days it takes to pay your bills. So that should be highly correlated with what the terms are that your vendors give you. So if your vendors give you all your vendors give you net 30, then I would expect you to be paying your bills in about 30 days, maybe just a day or two early. So you can compare that days payable outstanding to your payment terms and see how you're doing. The AP turnover, again, it's really measuring the same thing, but it's a turnover, so it says how many times per year do you pay your bills. Well, that's just a little bit harder to interpret. So I prefer the days payable outstanding. Again, we have a great article at Fit Small Business on the days payable outstanding metric. I will throw that into the description of this video as well. Okay, my 13th best practice. Track payments for 1099 NEC. NEC stands for non-employee compensation. So this is, again, when you bring on a new subcontractor, make sure you get a W-9 form from them. W-9 form from them. That gives you their tax ID number as well as their tax organization. So if they're a sole proprietor, you're going to have to provide them with a 1099 NEC. You want to know that before you make any payments to them. You can go into your software. Most software, QuickBooks Online certainly does it. You can indicate that this particular vendor requires a 1099 NEC. QuickBooks will track that for you for the entire year, and at the end you can print out a list of who gets 1099s and the amount that you need to report. So very, very handy. And my final tip, compare your payment terms to industry standards. So we've talked a fair amount about payment terms. Again, we do have a great article on payment terms. I'll go ahead and I'll throw that one in the description as well. But obviously, kind of be aware of what your industry standards are. Try to learn what your competitors might be getting, because if you're getting only net 10, you only have 10 days to pay your bills, your competitors are getting net 30, that's a pretty big advantage to them. Really, a lot of it depends on your size and leverage you have over your vendors. If your vendors are gigantic and you're very small, there may not be much you can do about your payment terms. However, if you're a pretty big customer of a vendor, then you might be able to push them to give you a little bit better payment terms, at least so they're as good as your industry standards. So those are my 14 best practices for managing your accounts payable. QuickBooks Online has a great accounts payable management tool built right into their accounting software. You can get a 30-day free trial subscription or 50% off for 3 months. I will throw a link in the description below if you'd like to check that out. And again, my name was Tim Yoder with Fit Small Business, and I look forward to seeing you next time.